Good morning, folks, and welcome to Stock Charts Today. This is Bob Desmond, and let's get to the pre-market activity on the S&P 500 at current. It is March the 28th, 4:51 in the a.m. Eastern Standard Time, and these are 4-hour charts. Overnight, we're seeing some weakness in the S&P 500. No shock after yesterday's big fade. Remember yesterday morning, I said, don't go chasing this market. We are at the precipice of confirming a breakdown in this market, and we are really 2 support levels away from breaking down into what I believe a bear market if it does occur. And support level number 1 is at 2586. Support level number 2, and this is the biggie, this marks the February lows, 2530. So are you familiar with how you're going to trade this market? And I'm not talking about making money, folks. I'm talking about preserving your capital, because there are going to be a lot of opportunities out there. Do you have a strategy outlined to weather this storm? I would strongly encourage everyone out there to think about what positions they're holding, how much risk you're willing to accept, what are your goals, and lastly, what is your line in the sand? Where will you stop out of your positions, or at least a portion of them? So we're down about 1/3 of a percentage point on the morning. S&P 500 flirting with support levels. The NASDAQ, overnight, we took out the prior lows from the 27th. We bounced off of those lows, but this is not good here on the NASDAQ. At current, we are down about 60 points, just shy of it. And in percentage terms, yesterday, the NASDAQ performed worse than the Dow Jones Industrial Average. Why? The FANG names. You had Amazon down, you had Google down, you had Facebook down. I'm going to get to a chart of Facebook and I believe Amazon in a moment, possibly even Google. I think they're up. Now you can see we have on this 4-hour chart resistance levels above. So rallies are being sold. Now, would I go shorting into the morning's open? No, not yet. Because what will happen, you'll have an ugly open, it'll rally back, maybe even go positive intraday, and then as we proceed into the close, it'll roll back over again. Now, if we roll over prior to the final hour of trades, let's say we rally back by 9:30, by 10:30, we're rolling back over again, I would look to short into a new daily low on whatever you look at a short, NASDAQ, the S&P 500, Google, whatever. The Dow futures, they're down about 80 points, about 1/3 of a percentage point. Here is our new upper band of resistance. So as we rally back up and into this resistance level, this will be a level at which we will look to add to short positions. So we've appropriately labeled this green because that's where we want to lean into our shorts. Let's take a quick look at the dollar. So the dollar, not surprisingly, rallied yesterday. It was on very thin volume. We're going to have the final revision of Q4 2017 GDP numbers released this morning. If they come in stronger than expected, you may see a rise in the dollar. If they come in weaker, my guess is that you'll see the dollar roll over and roll over hard. Now, we managed to rally back to recapture support. We had big topping action yesterday. We have rallied back this morning, but again, we're seeing topping action. So what we want to do is take our crayon out, draw our trend line, and here's our upper band of resistance in red. If we break down below this other red line here, marking the lows of the overnight session, in all probability, we are going to take out recent lows. If we take out 88.25 to 88.14 on the Dixie, it is all over for the US dollar. I have been very bearish on the dollar despite its counter-trend rallies. We have been unwavering in that dollar bearishness. The rise of the petro yuan is no great help to the dollar. In fact, it is undermining the dollar, and it will continue to grow in undermining the dollar in the coming months and years. Let's take a look at the euro. The euro is off the session low. Still a little bit weak. We took out prior support here, but we rallied back. So we may have an undercut double bottom. We are very close to multi-year highs on the euro. And if we get that breakout, it's all over for the dollar. Unless, of course, the yen drops to help salvage the US dollar. Let's take a look at the yen, see how it's setting up. Consolidating nicely. Honestly, it looks better than the euro. Oil was strong yesterday morning, but it gave up its gains and is now weak. We are holding support. We are consolidating. We're down about 0.75 of a percentage point, but we're holding support. Let's throw a trend line up here, a support level, I should say. All right, so you can see we have a bit of a wedge formation forming here. Now I'm torn on oil. And I think what it may be waiting for is the final GDP number here, because while the dollar is weak and that benefits oil to the upside, if we get weak GDP numbers, well, then that probably means that you may see some weakness in both the dollar and oil, because if we have weak GDP, then the question then becomes, if we have a slowing economy both in the United States and globally, well then, do we need all this oil? So before I took advantage of this pullback, I would prefer to wait for the economic data to come out, see how oil responds, and then look to buy the breakout, buy strength, watch the dollar. It'll be really nice if the dollar is pulling back, oil is rallying. That would be a tailwind for the price of oil. Unfortunately, it's also inflationary. And for those of you out there worried about, oh my God, oil's going up, the Federal Reserve is going to raise rates because of inflation. No. They don't worry about food and energy. They're too volatile. They back food and energy out of the inflation numbers. They ignore them, literally. I don't make this stuff up. Let's leave off here with Bitcoin. So what I've been watching here is this support level seen, this bullish key reversal seen on the 15th of March, 4-hour chart, bullish key reversal. We rallied, we pulled back. We are now retesting that prior low. And it was also support back here. So it's got a good history of acting as support. The problem is that if it breaks, we're going a ton lower. We'll probably go down and see a 5 handle on Bitcoin yet again. Now, if we rally, as we appear to be doing this morning somewhat, we haven't broken out above resistance. We're flirting with it. But if we rally up and above, let's call it 8,095, we may see a rally up to this upper band of resistance. If we break out above it, well, then that's a completely different story. We'll probably go considerably higher. But right now, we're retesting critical support. Have no doubt. If this breaks, Bitcoin's going a lot lower. And for those folks out there that are new to trading, you believe that charting is for stocks, it doesn't work for the new cryptocurrencies, all the old technology's dead. Don't kid yourself. I don't care if you're charting tulips, the price of a cup of coffee, or cupcakes. It doesn't matter. Technical analysis applies to cryptocurrencies as well. Just do a search of Bitcoin. I label it BTC on my website. You get all my videos with regards to prior commentary on Bitcoin. Let's get to member stock chart request. We'll kick things off with an article on Zero Hedge. This was published yesterday after I had sent out stock charts today, so I couldn't comment on it. But I have been speaking about Deutsche Bank with members, and I believe on Best Stock Charts, Deutsche Bank is a major problem. I'll go to the chart in a moment, but we now have a conversation with regard to the ouster of CEO John Contrarian. You have the Chinese, which is no shock, with their hand in current weakness. They said they weren't going to have HNA Group, big Chinese investment company, backed by the Chinese government. They're being very active in Deutsche Bank, unwinding its debt load, which is all well and good. But at the same time, while they're saying that they're not going to unwind their stake, they've sold 1.1% of the company, which is one of the reasons why, not the only reason why, you're seeing such pressure on the stock. The shorts are having a field day with the stock. Deutsche Bank is also having problems raising cash. So you have a liquidity crunch here at Deutsche Bank. This is a conversation, a topic that is only going to get spoken about more and more. Let's go to the chart. You'll note, this is a monthly chart. You'll note that Deutsche Bank has never recovered past its 2009 lows. Think about that. We are rolling over. We are down on the month, just the month alone, 13.6%. We are 60% off of the 2015 highs when this current CEO took over. As we continue to weaken here, and I predict that we will, you're going to hear more and more about counterparty risk. What is that? There'll be a conversation with regards to A, do we have a liquidity crisis at Deutsche Bank? The obvious answer is yes. The second question being, who has counterparty risk? Nobody will know. It'll be assumed that everybody does because Deutsche Bank is so big, and counterparty risk meaning who has exposure to derivative contracts with Deutsche Bank. Everybody does. If we break down below 11.06, which is a low of 2016, you're going to see a panic in the European markets. And if we get this breakdown below the 11.06 level and we close down there, you're going to hear the media, all they'll talk about is who has counterparty risk, are there ongoing concern issues at Deutsche Bank, speculation will rise, and there will be a selling frenzy of the financials, not just Deutsche Bank, but the European banks and the U.S. banks as well. That is why we are now short of the banks. Let's get to member stock chart request. TCP Partners. I went over this chart over the weekend. We booked profits on the rally yesterday. Thank goodness that we did, because immediately after selling our position, the shares sold off. I think we're going lower here. Why? It's because we have support levels below that have yet to be touched. If we pull back to these support levels, we will be looking to re-enter the position long. The shares are currently yielding about 11%. How safe that dividend is, I don't know. I would prefer to factor in here an announcement of a dividend cut, and I think the shares will rally in the days following that dividend cut. I think the market may just be waiting for that announcement. So you'll have a buy the news event, not immediately, but soon thereafter. So I'm not going to be a buyer of TCP Partners until we hit historical support. Members, more to come on this trade. Domino's Pizza, weekly chart. The chart is still consolidating. It's showing relative strength. As I've said in recent weeks on the chart, I like it. I can't buy the shares until we rally and we close above 235.43, which marks an all-time high. Daily chart. It's consolidating nicely. Not much to talk about here. I am concerned about even the strong rolling over as these markets weaken up. Now, I'll be honest with you, the MACD looks really good. If this market were not under such pressure, I would speculate in advance of the breakout here, scratch the itch. But I'm not willing to do that right now. Too much risk. If the markets sell off, DPZ hold support here, we get oversold on the markets, I would then consider opening up a position on DPZ in anticipation that DPZ would outperform the markets as the markets flash a counter trend rally. And in bear markets, folks, if we do fall into one, your bear market rallies are far more powerful than bull market rallies. Unfortunately, they're short-lived. That's the trade-off. Facebook. What can you say about Facebook? So what this guy Zuckerberg is going to have to go through is the gauntlet of self-serving imbeciles that are in Congress. He's going to have to testify because they're shocked that Facebook was gathering information and selling it. So they'll grandstand. They'll pass some regulations. This will all go away. But in the short term, Facebook is going to remain under pressure. You will see counter trend rallies on a weekly basis. We are leaning into the third standard deviation Bollinger Band. This is not going to last. We're going to get a rally in the coming days. I think that rally is to be sold. We'll be looking to put on a trade long of Facebook. I wouldn't look to short it right now, but longer term, I think that we have lower lows to go here. Big volume last week and this week. Daily chart, a bearish reversal day yesterday. I like the mid 140s to get long of Facebook, and we'll probably get a sharp counter trend rally. Members, more to come on Facebook. Amazon, weekly chart, threatening to take out support here. It's not a broken stock. Remember, Amazon, as much as I would love to short it, and I have in the past successfully, as much as I would love to short it, it has not broken down yet. And it has shown relative strength, so it's due a certain amount of respect. Because if this market does in fact rebound, you should expect to see Amazon lead the way. Now, with all the pressure on the FANG names, the time is right for a little bit of revenge by the Trump administration on Amazon. The environment is right. Remember, Jeff Bezos owns the Washington Post. Who does the Washington Post hate more than George W. Bush? Donald J. Trump. What does Donald J. Trump do to his enemies? He skewers them. What will be the agency? The FTC with antitrust charges. Watch out. Amazon may just fall victim of its own success. So we have a lower high on RSI. We're holding support. Volume this week is about on par. The daily chart is more concerning. We closed down below the 1500 level. That's a psychological level. We had a bearish engulfing of the prior day's move, which was a bullish key reversal. Normally a very bullish setup, which failed. We have both lines on Stokes trading down below 50. I think Amazon, if we break down below 1495.36, it's a short. If you're long, you may want to think about putting a stop in on a new daily low. Monsanto, weekly chart. So I'm rather surprised to see Monsanto really weak, along with the agriculture names, which were breaking out. They are now rolling over. But Monsanto is still holding support here. If you wanted to put it on a speculative trade and you committed that you would stop out on the close below 116.25, fine. Put your trade on. But if we close down below 116.25, you need to be out of this stock because it is going lower. Now, if it holds, well, then you would have bought right at the lower band of support. We remain in an uptrend channel. It is not broken. And in fact, if you look at the setup in 2015, early 2016, we had a nice W formation form, an inverted head and shoulders setup, left shoulder, head, right shoulder. Here was your neckline here, and here was your pivot point, January of 2017. And it's been off to the races ever since. Now, if we rally up and above 119.66, in all probability, the uptrend will have resumed in earnest and will retest the upper band of resistance. But I would watch the weekly chart. If you're going to buy the shares, fine. No big deal. Go for it. Put a stop in right below 116.25 and get out if it breaks. Now, on a daily chart, we have a double bottom setup forming on Stokes bullish. We are consolidating nicely here. We may just get, if the market pulls back hard, we may just get a pullback and a retest of this lower band of support. That's not a guarantee. We may just hold this consolidation, and I have here in dotted blue line a support level which has been holding. And if we rally up and above 118.50 and we close there, then in all probability we will resume the move higher. So that's the play on Monsanto. That's it for this morning, folks. Everybody have a profitable trading day, and I will talk to you soon. Be well.